All right, good afternoon, everyone. Thanks so much for joining us this afternoon on our monthly webinar. This month's webinar is on Maine's paid family and medical leave program. This is a new program starting next year. It is here, it's happening, and we are going to try to help you figure it out. So I'm really excited today. We have a couple of special guests today. Reggie Parson, who's the Deputy Director of the Maine program, and Luke Monahan actually has joined us as well. Luke is the Director of the program with the state. We didn't know if Luke was going to be tied up in the public hearing that was happening today, but he was able to join us, so I'm really grateful for that. So we also have Connor Kennedy with us from Acadia Benefits to answer some follow-up questions as well. And for those of you who don't know me, I'm Chris Clough with Paper Trails. So we're going to dig right in, but before we do that, I want to let everybody know everything we're going to talk about today is accurate and assumed as of today, September 17th, 2024. That's when we are doing this webinar. Rulemaking is ongoing. If you have not read the most recent draft of the rules, we will send you, give you a link at the end of this for you to go take a look at it. That is what all of this is based upon. And again, rulemaking is still underway. Reggie and Luke, let me know if I'm wrong, but I believe it goes, public comment goes through the end of this month, and then you guys will do another review and probably another draft. Is that fair?
I would say yes, the end of the month, September 30th, is the end of the public comment period for this version. And then after the conclusion of this, basically this period, we'll decide kind of the next steps. So yeah, so I think that's
so everything we're saying is assumed and accurate as of today. That does not necessarily mean that it will not change before the final rules are released later this year or first thing next year. So we're going to go through a lot of information today, lots to cover. We will have time for questions at the end, which will be wonderful. We're going to go through, basic overview of the program, how it was started, what it looks like, how the calculations are made, eligibility requirements, payroll reporting requirements, the private plan options, give you a few examples, and again, we'll have questions at the end. So Reggie, I'm going to let you take over, or Luke, whichever one would like to go, and we'll let you kind of walk us through the history of the plan and where we're at today.
Awesome. Well, great. Thank you, Chris, and thank you to those who want to spend the next hour with us learning more about paid family and medical leave. We recognize, as Chris said, things are still evolving, especially the rulemaking process, but we hope just to provide you with a framework of kind of how this whole thing started and kind of where we are now. So I'll start with the general overview. So last year, Governor Mills and the state legislature essentially adopted the paid family and medical leave program. This was included in the state budget that was passed last year. And so essentially we now have paid family and medical leave in the state of Maine. This law will provide up to 12 weeks of paid leave per benefit year for either family, medical, or safe leave, or military leave, and I can kind of go more into what those general qualifying reasons are later in the presentation. But this law will apply to most employees and employers in the state of Maine, with the exception of the federal government. So some key dates to keep in mind. So basically the Maine paid family and medical leave law, as I said before, was included in the budget that was essentially a non-emergency budget. So we had to wait 90 days to start the implementation process. So it passed in July of 2023, and then we had to wait until October of that year to get things rolling. But ever since then, we have been working really hard to try to meet some of the statutory deadlines that you'll see here. But first, I'll start with the Paid Family and Medical Leave Benefits Authority. So this authority is essentially a board made up of a very diverse group of individuals. Many of them come from the private sector, some from the public sector. 11 of the 15 members that are on this authority were nominated by Governor Mills and confirmed by the state Senate. So many of the folks that you will see here, well, not here, but many of the folks that you will see in future meetings have gone through a public vetting process. Those meetings, they've met now, I want to say almost four or five times now at this point. They have been very busy this year trying to get up to speed on what the department's been doing related to implementation and rulemaking. Those meetings are held 4 times a year, but again, they've been meeting more than that. You can find more information about the dates and the times that they meet on the webpage on Paid Family and Medical Leave. And you'll also see the names of the members who are on that authority. Some other just kind of key dates to keep in mind. So January 1 of next year, we have to have rules adopted for this program. So again, we understand that the time constraints that have been given to us by the legislature, but we are making an incredible amount of progress to have this rule finalized, hopefully by the end of the year. And around that same time, on the same date, payroll withholdings are going to begin for the Paid Family Medical Leave Program. And then May 1 of 2026, that's when benefits will become available. And I'm happy to chat more about what those payroll withholdings look like on a later slide. So just to kind of go more into the rulemaking process. So this version that's out in the public now is the second version. We originally did our first round of rulemaking in May of this year, taking into account all of the feedback that we received from stakeholders across the state, and those were more done on an informal feedback basis. So a lot of webinars, a lot of meetings to try to make sure that whatever first draft of the rule that we put out made sense and reflected the feedback that we heard. So the first round of comments, we received just under 300 individuals commenting and over 1,000 comments. So we had more than enough information to try to determine what the next steps are. And as you see here, we put out a second draft, again, hopefully reflecting much of the comments that we heard. And today, we also had a public hearing on the second version of the rule. So this was an opportunity for folks to come to Augusta and give us some additional feedback about what we should be considering for the second draft of the rule. And so basically, once this public comment period ends, which will be on September 30th, 2024 at 5 p.m., the department will then determine what the next steps are, and then hopefully, again, try to meet that statutory deadline of rules being adopted. So to kind of talk more about the premiums or the contributions for the fund. So the premium rate for this program is capped at 1% of an individual's wage rate split between the employee and the employer. There's also an opportunity for individuals to opt into the program, and those are self-employed individuals and tribal governments. And if they choose to opt into the program, it'll be 50% of the premium, so basically 0.5%. We try to provide a breakdown of what 1% means because we know not all businesses in the state of Maine are created equally. And we know the law can be a little bit complex when reading it. So we try to put an example of an employer with 15 or more employees and having a hypothetical payroll of $1 million a year. That premium that would be due on an annual basis will be about $10,000. The employer would have to contribute 0.5%, and all of the employees combined would contribute 0.5% as well, equaling 1%. If you are a business that is under 15, that premium rate is going to look a little bit different, as you see. So for employers of this size, the employer does not have to pay an employer share, but still must remit or pay 0.5%. And that can come from either employees' wages, or the employer could choose to pay the premium on the employee's behalf. And this applies to both employers of 15 or more or under 15.
A little bit later in the presentation, how to calculate that 15, because that certainly is always a question. So we have a slide in a little bit talking about that.
I was going to bring it up, but I was like, no, you're right. We'll save it for later. related time. All right, so again, the reasons that an individual can take leave and these are general reasons. So for either birth or bonding, or fostering, or to deal with a serious health condition of a family member. For medical leave, this is one to take care of your own medical needs. And when it comes to safe leave, these are for individuals or their family members who might be experiencing some form of violence, whether that's domestic violence or sexual assault, and they need to take that time off to get or stay safe from their situation. And when it comes to military deployment, this is for family members who might be called to active duty, and that spouse, for example, might need to take some time off to handle that transition while that spouse is getting ready to deploy. That's just one example of someone using that type of leave. So when it comes to the types of leave, there are 3 types that are generally can be used for this program. So obviously, I think everybody knows or understands the continuous leave part. So you might be out, for example, 6 weeks off or 2 weeks off or 3 weeks, depending on what the individual is applying for. But there's also intermittent leave. So essentially an employee is essentially still working, but they're taking time off in increments to deal with whatever qualifying reason that they have. They might have to go to chemo as one example, and then they're going back to work, potentially that same day. And then there's also reduced leave where, again, the employee is still working, but they're not working their normal schedule, before taking paid family and medical leave. So those are generally the types of leave that can be taken. So when it comes to the requirements and eligibility for this program, so I'm gonna hopefully try to slow down a little bit more and then try to provide more context. So there is notice requirements for both the employee and the employer, but for this slide, I'll start with the employee. So unless it is an emergency, the employee must give reasonable notice when it comes to the scheduling of leave. And so we put in our proposed rule that reasonable or foreseeable could be 30 days. And again, we'll take into account any comments that we receive in this second round and determine what the next steps are for that. Proof must be provided that the individual qualifies for one of the approved reasons for leave. And I'm imagining there might be some questions around, does the employer need to see medical certification or anything like that? So the employer, for this particular program, there's confidentiality requirements that are associated. So the employer should not be, having to look at an employee's medical information. All of that will be sent to the department when that individual applies, or for their family members, and they will have to probably get a medical certification certifying that this person does have a serious health condition. I'm just using medical leave as one example. There is also an earnings requirement for this. So an individual must earn 6 times the state average weekly wage in 4 of the last 5 completed quarters. So this is almost somewhat similar to the unemployment insurance program, where we're trying to determine whether you have hit that earnings requirement in 4 of those 5 completed quarters. The current state average weekly wage now is $1,144. So if you multiply that by 6, that is the earnings, that is the number that someone would need to earn in order to meet one of the criteria for this program. And again, I won't jump into maybe what future questions might be, but I would imagine there might be some questions around, do you have to earn that number for one distinct employer? And the answer is no. That might be people, obviously, who work two or 3 jobs. And by the time that they apply for paid family medical leave, they might have hit that earnings requirement as well. And then finally, the scheduling of leave cannot cause an undue hardship onto the employer. We have tried to, and I think a lot of people understand, this is a term that is unfamiliar to a lot of paid leave states across the country. Maine is the only state to have this undue hardship clause in any paid leave law. So in our rule, we're trying to basically create something from the beginning, but definitely happy to take more questions about undue hardship, when we get to that part. And then, so some important information for employers to consider. So as I said before, there are notice requirements for both the employee and the employer. And I'll get to that last bullet point later, but I'll start with job protections. So essentially, an employee who has not worked for an employer for at least 120 days are not entitled to job protections after they have taken leave. But if you do have an employee that has worked for you for more than 120 days, you are entitled to hold that job for them or job equivalent to the one that they had before taking leave. There is also an option for an employer to pursue a private plan substitution. And so there are two forms or two ways of doing that, I guess. One could be a fully insured plan, which is basically you're purchasing an insurance plan off the market, or you have a self-insured plan, which means it's coming directly from the employer. The employer is paying to have that type of program. But the private plan substitution, I would say, must be substantially equivalent to the state plan. The term substantially equivalent was not defined in our statute, but we did set out in our proposed rule the minimum criteria on what could be a substantially equivalent plan. So I would definitely encourage folks to look at that part of the rule and offer a public comment if you wish. And then not finally, but I guess one of the other things about the private plan substitution is that the department does have the ability to withdraw that private plan substitution if any of the terms and conditions are violated. And in the proposed rule, I think you'll see some idea of what those terms and conditions are. And then finally, when it comes to notice, the employer must notify employees about the Maine Paid Family and Medical Leave Program. And if the employee does not do that, the employer does not do that, the employee's obligation to inform the employer that they're scheduling leave is waived. So I would certainly encourage folks to look at the Paid Family and Medical Leave law on how to satisfy that notice requirement, because it's going to be critical to make sure that employees are notified and it doesn't create any future tension when scheduling leave. We also should have, hopefully, sometime before the beginning of 2025, basically the standard poster that you see in many break rooms across the state that kind of lays out more information about the Paid Family Medical Leave program. And so when it comes to the benefit calculation, this is going to get a little mathy, but there is a two-tiered wage or benefit replacement for this program. So for individuals who have earned the individual's average weekly wage, so this is the employee's wages essentially. If they have earned at or less than 50% of the state average weekly wage, they will receive a 90% wage replacement. And then any earnings over 50% of that state average weekly wage is going to be replaced at a 66% wage replacement. And as you see at the bottom, at the last bullet point, benefits are capped again at the state average weekly wage. I will say that number that you see here is subject to change on a yearly basis, but this is the most current number as of 2024. So just to maybe provide some context about kind of what the two-tiered benefit or wage replacement system looks like, we used essentially three examples. And so for this example, we have Morgan, who's a full-time accountant who earns about $57,000 a year. and she needs to take about 8 weeks off to deal with a serious medical condition. So you'll see basically by the bullet point in the next section what her weekly deduction for paid family medical leave will be. So it'd be about $5.50 a week, or $285 a year. Since Morgan works for an employer with less than 15 employees, again, kind of hopefully bringing it home, the employer does not have to pay the essentially other $285 a year for Morgan's paid family and medical leave benefits or for premiums. And then you'll see what the two-tiered wage replacement looks like. So again, because she's earning about $57,000 a year, and she is earning more than 50% of the state average weekly wage, she is going to receive, if she's approved for paid family medical leave, about $859 a week. So go to the next slide. So this is another example with a different salary scale. So this is someone who's on the lower income spectrum of things. But in this case, Michael earns about $35,000 a year, needs to take 6 weeks off to bond with his newborn daughter. And again, you'll see what Michael will pay per week or per year for paid family and medical leave. But because Michael's employer is working, because Michael is working for someone that has 15 or more employees, the employer would have to also contribute the $175 a year to the paid family and medical leave fund. And actually, I'll talk more about the paid family and medical leave fund at the end of this for folks who are like, where's all this money going? But again, sorry, can you go back to the previous slide? Sorry. But as you see here, based on the two-tiered wage replacement, Michael's going to be earning about $580 per week while on paid leave. Sorry. And finally, this is someone who is on a little bit of the higher income scale, but you'll kind of see the example of what we mean by the weekly benefit amount being capped. So in this case, Joe is an IT professional earning about $90 grand a year, and she needs to take about 4 weeks off to recover from surgery or medical condition. Again, you will see the breakdown of how much she'll pay into the paid family medical leave fund, and how much the employer would also have to pay. But where, again, we want to hit home about what the cap of the state average weekly wage means. So if we calculated all of her wages, you will see that she's earning $1,278 a week. The law requires us to reduce that benefit down to $1,144 if Joe was applying for paid family medical leave today, and if it was up and running. So that's an example of what we mean by again, capping the state average capping benefits at the state average weekly wage. All right.
Perfect.
And so now,
you want me to pick it up from here?
Oh, yep.
Perfect.
You wanna?
So Reggie, thanks, Reggie. Reggie just gave us a great overview of the kind of the building of the plan. Our questions have kind of gone around now. How do we implement this, right? So the first thing that everybody needs to know is that all employers will need to take action. Reggie and Luke and the team are already building out this new state portal and should launch early 2025. Every employer in the state will need to register for this portal. And eventually, if you are going to use a private plan substitution, you will use this portal to register that, and a little bit more on that in just a little bit. So you will have to submit quarterly wage reports, regardless of whether or not you are participating, right? So if you are doing a private plan substitution, you still have to submit wage reports with zero premiums due as well. So that's really important to keep an eye on that. I would encourage you go to maine.gov/paid leave and get on their notification list, because that is where they're going to tell you first. I think there's some questions of logistics, but I'm assuming there are going to be letters and emails going out early January to get everyone registered for this as well. So we talked a little bit about that annual size determination. So this has been updated in the most recent rules. So how do you determine if you have 15 or more employees and whether or not you have to contribute? And this is something that is different in every single program that we as payroll and HR people live with, right? Sometimes it's bodies, sometimes it's FTEs. In this program, as of the current draft, essentially you need to take a census on September 30th of each year. And if you had 15 or more employees paid in the last 20, in any 20 weeks in the previous 12-month period, that would mean you would be liable for the following year to make that employer contribution. So this does include all covered employees under the rule. And there's a definition of covered employees in that rule, but that's full-time, part-time, seasonal, temporary, intermittent employees. Everyone counts. So anybody that is paid on payroll is included in that 15 employee count over any 20-week period in any 20 weeks in the previous 12-month period. So October 1st to September 30th, right? So based on this count, if you have more than those 15 employees in that period, you must contribute that 0.5% towards the paid family leave premiums for the following year. So for our clients, we are working on calculation report, which we will do. We will report this to Department of Labor through that reporting. I've seen a peek at the specs, and it looks like that's something we have to report with that third quarter quarterly. So that is something that's going to be calculating as well. So we will get to some questions. There's some great questions in here coming through. We'll get to questions at the end. So payroll reporting, again, you are going to have to register. For our clients, we're going to put together a checklist. We're going to give you instructions once everything's posted. More information on that to be released probably early January. But you will need to start calculating those taxes on January 1 of 2025. In the rule as it states today, there are some limitations, which I submitted in my comments to these guys, and hopefully you do as well. Basically that say if you miss a pay period, you're kind of out of luck. So be paying attention to that and make sure you're starting to calculate those starting January 1 of this year. And I will ask a question when we get to the end about how do we determine this year's liability, but I'm assuming I know the answer. But you will likely need to fill out a power of attorney form for any third-party administrator like us, and we will work with our clients, and you should work with your providers to make sure that they have that, so that if they are doing reporting on your behalf or calculations on your behalf, that would be taken care of appropriately and on time. So again, I will reiterate, even if you are using a substitute private plan, you must still report your wages in this portal every quarter. Contributions will be due, but the wages must be reported. So for our clients, certainly keep an eye on our newsletter. Our year-end checklist is coming out. We've got social stuff planned. We will be doing a lot of communicating about this. For not our clients, be sure to keep an eye on that paid family leave website. Sign up at maine.gov/paid leave to get on that newsletter list. So, Connor, can you take us through some of the private plan substitution information?
Sure. Absolutely. Can everyone hear me?
You're in.
All right. Awesome. Well, thanks, Chris. Just like Chris said, my name's Connor. I work for Acadia Benefits, and we support our customers all throughout Maine and New England, strictly with employee benefits. And our thought is, whether you want to participate, you are participating, right? In the public program or private. These next couple slides are mainly for those of you that are over 15 employees. Maybe you have an established relationship with your current life and disability carrier, or looking to establish a relationship with a life and disability carrier. There is an option in the rules for you to do that. So applications for substitution may be made after April 1st of 2025. Keep in mind, like we've said before, right? This premium is starting this January of 25. You'll pay this premium through this January, and then you do have the opportunity to submit an application for a review of a private plan as of April 1st. Applications for substitutions must be submitted online on a form provided by the department. Applications for substitutions may be accepted on a rolling basis. So beginning in April 1st of 25, the application fee is $250 for review of the application, and an additional $250 administrative reimbursement fee if the application is approved for the substitution, right? If your private plan is ultimately approved and you get the green light to start your program, say 5/1 of 26. An approved substitution is valid for a period of 3 years. The exemption from the obligation of premiums begins on the first day of the quarter in which the substitution is approved. Except if the application, and this is a little bit in the weeds, except if the application for submission is submitted less than 30 days prior to the end of the quarter, in which case the exception is effective the first day of the quarter following when the application for submission was submitted, assuming it is approved, right? So if you wait, you may have to wait longer for your application to be approved. So if you are considering going private and or just looking at pricing, right, you're going to want to be on top of that. If employee withholdings were made prior to the substitution being approved, the employer must refund the withholdings to the effective date of the exemption within 30 days from approval of submission, and failure to do so may result in a cancellation of your substitution, right, of your private plan. So if you're taking payroll deductions, waiting for approval, be sure to get those back to your employees. So the employer is responsible for premiums provided under the Act and this rule until the effective date of exemption, and premiums owed prior to the effective date of exemption must be remitted and are non-refundable, right? So all Maine employers are paying into this program, regardless if your intention is to go with the state plan or explore a private option. And even if you're accepted, right, those premiums, as it states today, are non-refundable back to the employer. While an employer must have entered into a contractual obligation with a certified fully insured plan, right, these are your national life and disability carriers, or a self-funded plan, the employer may choose to start benefit coverage by May 1st, 2026 at the latest, right? This doesn't get you out by any means of starting coverage, right? The policy can go into place no later than 5/1 of 26. That's when benefits begin for the state program and any private option that you're considering. If an employer is found to not, if they do not start these benefits after May 1st of 26, they will be responsible for paying retroactive premiums to the start date of the exemption to May 1st of 26 and cannot not deduct the employee share of that premium for these retroactive premiums. So if you're thinking, hey, I'm going to go with the private plan, oh, and then I'm not going to put it in place as of 5/1, be very, very wary of that, because you will have to pay a very serious penalty here. And if you're over 15 employees, right, you cannot take some of that contribution share from your employees. You will owe that full premium. For substitutions approved after May 1st of 26, benefit coverage must commence on the first day of the first following month following the approval of submission. All right, Chris, next slide. So how should you prepare for this program? These are just a couple of bullet points that we're talking to all of our customers about today, kind of really general, but to get you thinking about your current policies you have in place. So determine the potential impact to your budget, and if you will help fund any of the employees' 50% contribution, right? We have customers saying, yes, we're going to fund this program, or saying, hey, no, we're doing the 50-50 split. Connect with your payroll provider, of course, paper trails here today, to ensure that you're set up and ready to go for those 1/1/25 deductions. Stay informed on opportunities for private plan substitution, if that's an option of interest, right? Depending on your demographics and many other considerations, whether it's your industry, things of that nature, will determine cost, right? Maybe the public option is a much cheaper option for your company. Maybe a private plan is cheaper for you, right? But we do suggest you obviously explore both. Evaluate STD, your current short-term disability, and internal leave policies to make sure they're aligned with the new paid family medical leave requirements, right? Most of our customers, their short-term disability policy may be going away starting 5/1 of 26 if they don't believe it provides any more value to their employees. Say their maximum is already lower than the state benefit, right? Maybe that just goes away. And maybe you have an internal leave policy that this program, you can wash your hands of your internal leave policy because those leaves can now be funded or submitted directly through the state or a private carrier. Evaluating your STD elimination period, I think, is very important to assure it aligns with the new paid family medical leave program, right? You do not want a gap in coverage. If someone was to go out on a medical leave for 12 weeks, you want to make sure that that LTD benefit lines up with that 12 weeks to ensure that transition is smooth. And then, of course, like we talked about already, it is a requirement, but be sure to educate your employees about this program and the payroll deductions that are coming this January.
Perfect. Thank you, Connor. So we did have a couple of frequently asked questions. These are ones that were taken basically right off of the paid family leave website. Again, I'm going to keep harping you, go to maine.gov/paid leave. But these are the most common ones so far that the department has gotten. So if benefits do not go live until 2026, why are those contributions being made in 2025? And certainly this will allow the department to begin to accumulate sufficient funds to pay benefits in 2026 when the program goes into place. If I'm an employer and I would like to pay the employee's share of these contributions, am I allowed to do so? And the answer is yes. So if you are an employer with 15 or less employees, you could pay that 0.5%. If you are an employer with 15 or more employees, you could pay the total 1% on their behalf, if you so choose. Who is responsible for remitting the contributions to the paid family leave fund? And certainly that relies upon you as the employer. If you are using a payroll company, I can speak for our clients and for what we'll be doing. We will be collecting and remitting those funds for our clients starting in Q1 of next year, but certainly be on the lookout for the registration information coming in early January to get registered and touch base with your payroll company if that is what you're doing. So, and I am self-employed. Am I eligible? And yes, self-employed folks are eligible, but you have to opt in, and that will be for calendar years 2020, 2025 to 2027. They can do 0.5% of that individual's income from self-employment could go into that fund to become eligible. So for more resources, again, maine.gov/paid leave, really great resource, lots of good information out there. The rulemaking, the current rulemaking is out there and open for public comment until the end of this month. So please go take a look at that. It is quite long. I think I was looking at it this morning, actually, answering questions, and we're at 27 pages, but it's really detailed and gives you really great information. So please take a few minutes to look at that. It'll probably answer a lot of your questions. We certainly will be keeping our socials up to date. We have a whole page on our website with a guide to information as we know it today. This webinar has been recorded and we will be posting it on our website, on our YouTube. We will be sending that out with the slide deck and an overview of the Q&A after this recording today. Hopefully we'll get that out to you tomorrow. So hopefully those resources will be available to you very shortly. So I am happy to open it up to questions. Reggie and Luke, we've got a bunch here in the Q&A. Feel free to use the Q&A, the chat. We will get to you here. So the first question I have is, it is not a running total. So if you have 12 employees and replace 4, that would be considered 16. I'll take that if you guys don't mind. The way my understanding of it is, it is 15 employees on payroll in any 20 weeks in that 12-month period. So you have to look at every week of payroll and see if you have 15 or more employees on that 20 week, in any 20 weeks. Is that fair to say, Reggie?
Yes, yeah, I would definitely say, and that Luke is nodding his head. We know that hopefully it won't be too much of a stressful thing, but we know that, every employer has different ways of evaluating that. But yes, that's correct.
And we're working for our clients to come up with some reporting to help with that on September 30th every year, because we know my brain's melting thinking about how we're going to manage that. So I'm sure that everybody else is as well. There's some people very clearly over that, but the folks on the line are definitely going to have some questions. So are owners considered employees? If they're on payroll, my answer is yes. Reggie, do you agree?
I would say yes. I mean, maybe Lucas.
Yeah, I mean, it depends how the corporation is structured. So if they're drawing a salary from their own business, they're an employee of their business. Correct. And then I know there's business owners out there that are sole proprietors, and that's different. But if they're drawing a salary from their own business, if it's structured that way, they're an employee and they're covered. If there's a sole proprietor, they have the option to opt in if they choose.
Perfect. Will this run concurrently with our short-term disability? And essentially, I'll defer to Connor and Reggie and Luke on this, but my interpretation is this is going to replace most employers' short-term disability policies, unless you are going to come up with that private plan option.
Yeah, my only comment there, and of course, team correct me, is your PFML program, right? You have your 12 weeks of benefit. If you were to use your 12 weeks, say early on, say in June of 26, I believe the benefit is on a rolling instead of calendar year, kind of a rolling benefit period, right? So if you would use your 12 weeks and say later on you were to have an accident or an injury, you could always use that short-term disability benefit to compensate yourself while you were out on leave until you had your PFML benefit back available to you. My other thought there about short-term disability programs, and I don't know if this is, yeah, Luke, please correct me if if you have, say, a short-term disability plan that's at a 60% to a 1,500 max, right? Maybe that'll stack on top of your PFML benefit to kind of top off high wage earners who are capping out at the PFML benefit max.
Yeah, we structured it in the rules. We have short-term disability policies do not reduce the benefit amount for that wage supplementation for high wage earners. So I do think it's going to interact with short-term disability policies, but not necessarily replace them. Because as Connor said too, a lot of short-term disability policies carry coverage up to 6 months or a year, and PFML only covers 12 weeks of a medical event. So I don't think it's going to eliminate short-term disability completely. It's just going to interact in different ways.
And keep in mind, if you do have a short-term disability plan today, we're expecting those carriers to cut your short-term disability rate significantly because your benefit will be filed primarily initially through the PFML program. So something to keep an eye on there. But of course, we have tons of customers that will say, you know what, this is an opportunity for us to, remove the STD plan and utilize the PFML benefit as our core disability program.
I have a question about remote employees. So if businesses have Maine and remote employees, would the census and that calculation be based only on their Maine employees, Luke or Reggie?
Yeah, so we have one of the FAQs that was updated on our website just this week, gives more details on the locality of work definition, but you will only count Maine workers, quote unquote, as defined, similar to state UI definitions. And also in the FAQ on our website kind of talks about the four criteria on the test for how you determine a Maine worker, but you would only count your Maine workers in that count up to determine the employer size. So if you're a company out of Alabama and you have 3 Maine employees because they're remote workers in Maine, you only count those 3. If you are a company in Kittery and you have some New Hampshire workers and you have some Maine workers, as defined in this 4-prong test, you only count your Maine workers for that coverage of the employer size.
And to follow up that, those non-Maine employees would not be eligible for Maine PFML, correct?
Correct. They are not a covered employee, quote unquote, as defined in rule. You have to be a covered employee, which is a worker earning wages in Maine as defined.
Will the website be separate or will be added to the Maine tax portal?
It's going to be a separate portal. Same company is building it, so it's going to feel similar to the Maine tax portal, but it's going to be a separate portal that you will click through from our maine.gov maine.gov/paid leave landing page. You'll be able to click over to our Maine contributions portal. It'll be separate from the Maine tax portal, though, yes.
And similarly, will a separate POA need to be filed, or will that be covered under Department of Labor or Maine Revenue POAs?
if for a third-party administrator.
Yeah, every employer will need to register with this new portal to update their contact information. We're asking for very few fields. We're trying to make it as painless as possible for the registration process. And to kind of go back to a previous question, when do you report the liability for the first year? It'll be during that first registration. So when you go to register as an employer, in January or February, that's when you'll answer the employer size for 2025. Looking back at your count from October, you'll report that at your registration. That'll be one of the data points we collect, which will determine your premium amount for 25.
Great. Will our payroll company automatically take the money out each week once this starts? I can speak for our clients. Yes, we will be doing that. We will be sending out a lot more information for our clients. I think it's fair to assume that most payroll companies will be doing this for their clients. This is happening across the state, across the country, and we are already doing similar type programs in other states. So I think it's fair to assume that most payroll companies will, but please communicate with whoever your payroll provider is if it's not us, and we certainly encourage you to do that. What are the qualifications as an employee? What's the definition of an employee? Must they be 18 years of age, etc.?
There's no age requirement in statute now.
So any employee that's legal to work in the state of Maine is covered, essentially. And there's a definition of wages and so forth in the rule that you can take a peek at. Is the 120 days of eligibility consecutive? And I believe this 120 days of eligibility is more for the job hold, not necessarily for the eligibility. I will defer to you on what the eligibility is. Again, I don't have that memorized, but essentially, even if an employee starts with you and they have met the eligibility requirements under another employer, technically day 2 they could go out on leave. Is that fair to say? However, there's 120 days. If they're with you for less than 120 days, they do not have to. You do not have to hold their job. Is that correct?
Yep. That's correct. And the question about whether it's consecutive, I think we kept it in our second proposed rule.
It's in the rule. If we clarify it's consecutive, it has to be 120 consecutive days.
Yeah. And that's only for job protections, not necessarily whether they're eligible.
What about foreign employees, H-2Bs, J-1 visas? Do premiums have to be paid for them, and are they eligible for benefits?
Yes, as long as they can legally work in the United States and they have an ITIN number or Social Security number is how they would be reported on the wage report. So if they have an ITIN or a Social Security number and they're eligible to work, they're covered for statute.
Do nonprofits have to contribute?
Yes.
Can employees opt out if they do not want to participate or contribute?
No. That's per statute as well.
Do contractors count as employees? And I can tell you under the wage definition, they do not. So if you have 1099 contractors, those do not. It's only W-2 employees.
Although they can opt in to coverage if they're self-employed.
If they're self-employed, yes, the contractor could opt in for their own coverage, but wouldn't report through you. So in calculating the 15, you choose the 20-week period in which you have the most employees. It's any 20 weeks, does not have to be consecutive in the 12-month period. Is that correct?
That's correct. And it mirrors another federal law, and I'm spacing on which law it was, but it was actually a recommendation of what the authority, if people watch the authority meetings, we actually had an in-depth conversation about employee counts. And that was a recommendation of the PFML authority was this method, which is mirroring another law.
I want to say FMLA.
No, it wasn't FMLA. It was another law. But it's the payroll kind of method that bigger employers are kind of familiar with, or some employers are familiar with. So
but other paid leave states do have this kind of look back and trying to determine premium liability. So Maine isn't coming up with something that isn't new.
So here's my question. So if for the contributions that are due this coming quarter, should we be using the calculation as of September 30th, 2024 to calculate that?
Yeah.
For seasonal businesses who have more than 15 employees, but only work 10 weeks, and then 2 to 4 on staff the rest of the year, how would that apply? And again, if it's only if you have 15 or more employees for any 20 weeks in that year period. And Mimi, we're going to have some reporting for you to help that. Based on what I know about you guys, you probably would not be over 15, but we'll have to take a peek at that once we get some more details, and certainly email us afterwards. I only have 12 employees. Do we have to opt in? You do have to,
Yes.
you do have to register for the program. Every employer has to register for the program. You do not have to contribute to their premiums if you have less than 15. So the employees would contribute the 0.5%. You would not contribute anything, but you as the employer have to facilitate that process and go ahead, register and contribute those contributions every quarter to the state. Correct? Anything else to add to that, guys?
I think that covers it.
Is the definition of family the same as the definition that is under FMLA?
So no, it's not. I would encourage folks to look at the paid family and medical leave statute, because the definition of family is pretty broad, and it also includes relationships that are not necessarily relationships family by blood. Essentially, trying to avoid using the term affinity relationship, because that's a concept that other states have used. But if you have a personal significant bond with an individual, that could count as family under Maine's paid family and medical leave law. But again, I would definitely encourage folks to look at the paid family and medical leave statute on the definition of family.
Does this apply to per diem employees and non-exempt employees? And again, if they are being paid on payroll as W-2 employees, yes, that is the answer. Does this coincide or affect earned paid leave? And I would say that this is in tandem with earned paid leave. There's no, that program is still in place. You must still provide up to 40 hours of paid leave to employees. This is in addition to that. Is the benefit taxable?
That's the $1 million question that we're still grappling with. So I would say as of now, no. If this benefit were to be live in 2024, the answer is no. But when benefits go live in 26, it might be a different story. But I'll just stop.
Yeah, I would say it's unclear. So
Yeah.
the IRS has not given guidance to state paid leave administrators about the taxability of benefits for these state programs. They are promising guidance by the end of this year. And I would say the taxability of benefits is still unclear in the absence of guidance. But we're hoping to have, obviously, more clarity before 2026.
Does every employer with 15 employees need to contribute the 1% of total payroll costs for all employees, or just the employees who qualify for the program? Example, the ones who work 20 or more weeks. So this is for every employee. Every employee is eligible, every employee must contribute their 0.5%, regardless of your size. The only difference is once you meet that calculation, you have the option, you have the requirement to pay the additional 0.5% to get to the total. Either way, you as the employer could choose to cover the whole premium if you'd like. This is for all employers regardless of number of employees. Correct. If you have any employees, you must opt in to this program. I guess opt in is the wrong question. It's the wrong term. You must participate in this program. Will there be a third round of public comment, or will this be the final round?
I would say that, again, we're aiming to have these rules finalized by the end of the year. I can't speculate as to what we're going to do after the public comment period, but again, our goal is to have this finalized before January 1 of 25. So that'd be my best answer.
Okay. Are these contributions pre-taxed? So like a health insurance section 125, something like that. These are not, I'm going to assume these are not deducted from your federal or state income tax or anything like that. Is that fair to say, gentlemen?
We also don't have IRS guidance on that, so we're just asking people to follow their best tax advice from their tax professionals, because IRS does not wait on that either.
So I can tell you in every other state that we do this for, it is not pre-tax. And I would assume that that will be the same way we'll do it with this one. And again, the IRS guidance is lacking for all states. This is not a Maine specific issue. They're asleep at the switch most days, right? So will it be a rule in the plan that this fund cannot be borrowed from to fund anything else other than its intended plan?
Yeah, so actually that's a good, yeah, because I was going to talk about the Pay Family Medical Leave Fund. So no. So all of the premiums that are going to go into this fund are going to be essentially in a trust, only to pay for benefits and administrative costs. Those are two of the primary reasons. The state legislature or any other entity will not be able to pull money from this program. That is not meant to be for Pay Family Medical Leave.
If you have more than 15 employees, but most of them are part-time and don't qualify for PFML with the minimum earnings, do they count towards the 15 employees to require employer contributions? My answer is yes. Any employees part-time, and there's no minimum earnings associated with this. So if you have 15 bodies or more in any 20 weeks in the prior year period, you must contribute the employer portion. Does that sound reasonable to you guys?
Sorry, I missed that one. Can you say that again, Chris?
If you have 15 or more employees, but most of them are part-time and don't qualify for PFML with the minimum earnings, do they count towards the 15 employees to require employer contributions? And
yeah, they still count towards the count. It's people, not FTEs.
And there's no minimum earnings. If they earn $1, they are in that count.
As long as they're on payroll for 20 weeks or more, earning $1, yes.
Correct. How will employers know when employees are approved? If I keep my short-term disability, how will we know what they are paid so we can top off the PFML?
Yeah, in our second proposed rule, we did, because we got a lot of comments about this, the employer being notified, which makes sense. I'm assuming if this stays the final rule, employers will be notified about whether they've been approved, whether the employee has been approved to pay family medical leave, whether they've been denied, or whether they're seeking a reconsideration. So the employer should know and can kind of take that next step on topping off.
And the benefit amount, so that
yes,
employers can top off if they choose to.
I know it's just 3 o'clock. We've got a few more questions. We'll shut off here in a minute. But Luke and Reggie, do you have another couple minutes?
Yeah,
we're good.
Yeah, we're good.
Who determines what qualifies for leave and how? The qualifications are pretty clear in the statute, but that goes through you guys, right?
Yeah, so the department will determine whether someone qualifies. It'll be just like any other benefit-like program that the state is running. So we'll assess whether whatever reason that they're saying they can take leave for is a qualifying reason. The department will determine that. The department determine the earnings requirement and stuff like that. Yeah, so it'll all be ran through the state.
Is this limited to employees over the age of 18? We have a lot of employees 14 to 15. You said there's no age restrictions. If they're getting paid, they are required to contribute and eligible for coverage, correct?
Yeah, there's no age limit.
If you live in New Hampshire but work in Maine, do you still contribute? Yes. Maine, anybody that works in Maine, these are payroll taxes. They're based on your work location. That's the eligibility. If the employee has historically paid employees for short-term absences due to sickness for a day or two, how will that be covered under the program? My interpretation would be have them use their earned paid leave or whatever sick policy you have internally. But can they use this program for a day or two of sick time, guys?
There's no prohibition on how short the leave needs to be, other than it needs to be a serious health condition as certified by your medical care provider. So, if it's a virus that's going to last for 2 days, I'm not sure that's going to meet the, a cold virus, I'm not sure that's going to meet the serious health condition that you're receiving routine care for, would be my initial thoughts. It has to be a serious health condition as, noted in statute and certified by a medical provider.
Do the premiums calculate on all wages, including overtime? And the answer is yes, it's all the same wages, very similar to how Department of Labor calculates the overtime wages, correct? How do you handle seasonal employees who come from out of state? Again, if they meet that eligibility of 6 quarters, right?
Yeah, it's 6. Sorry, yeah, I know it gets weird. Yeah, 6 times the state average weekly wage. So, if you have a seasonal employee who it may not be for this one specific type of employer, but if you have a seasonal employee who's earning wages from a previous employer, they might hit that earnings requirement. But that might be that is a good question, I guess. Maybe
what was the
seasonal employees from out of state?
Yeah, as long as it's that definition of locality. So if they're coming to Maine and they're working in Maine, that's Maine wages. They're contributing to the Maine program. They're eligible for leave. It's based on the locality of work, not where somebody resides. And there is an FAQ, like I mentioned, that has a 4 kind of criterion test for determining what's Maine wages, what's a Maine worker per se.
If employees under 15 pay only the 0.5%, are their benefits reduced? Basically, if the employer is not contributing, does the employee get reduced benefits?
No,
it's the same.
Yeah, it's the same
benefit.
Yeah,
tiering for anybody.
Yeah,
it's just whether or not the employer is also paying not a match, but towards the premiums based on the employer size.
Yeah, and the benefits will be determined again looking at that individual's earnings. So if they're earning I don't know $1,500 a week, that will be one factor as to what the weekly benefit amount will be. So hopefully that clears that up.
Is there an option to pay the premiums weekly instead of quarterly?
So the statute does say quarterly. I know we're working on functionality of the portal right now. There may be a prepayment option, but the statute does say remittances need to be quarterly. So we're starting there.
Why was it decided to not follow the same eligibility requirements as FMLA? I would say you need to talk to the legislature about that because they wrote it into the statute, right?
Good legislative question.
Yeah, it's a great question. Yeah,
and there's been discussion at those board meetings, I believe, about potentially asking the legislature to draft some new legislation to clean up some things. Is that correct?
The authority can make recommendations for statutory changes. That's one of their not tasks, but their duties for the statutes. They can make recommendations on statutory changes as an authority.
Is there a cap on earnings that are subject to the tax?
So
like a wage base, like unemployment.
Yeah, it's determined, but so premiums for this program will be based on the Social Security wage limit. So any premiums that obviously are paid over that, that employee might be entitled potentially to a refund. But yeah, it is capped at the Social Security wage limit.
Well, the system will, so when you report wages, you should report all wages, and the system will calculate if you're hitting that Social Security wage cap when it's calculating the premiums. But when employers are reporting wages, they should be reporting, if somebody's making $300,000 a year, report that, and the system will cap it at I think the cap is 168,000 right now. The system will automatically cap that person's wages when it's determining your premium liabilities at that cap. But the total wages should be reported. So if somebody's making 500,000, report that. The system will cap it when it's calculating premiums.
Is each the 15 employee cap, that in the rules, I will kind of answer this and ask the question at the same time. In the rules, the 15 employee count is per EIN, correct? It is not an aggregate count like some other counts. Is that correct?
Yep.
So if you have 5 businesses and 4 of them have 15 or more, but one does not, that one does not have to contribute.
Correct.
Is there a maximum?
They have to take FEINs, yes, I would agree with that. Yep.
If there is a maximum amount, is there a maximum amount of employees that can take leave at one time?
No, there's no maximum amount. The statute didn't contemplate that.
When will we be able to log into the portal and register our business?
So we are saying early 2025. As we get closer, we'll announce a date. But as with any technology contract, we don't want to pre-advertise the date and have it move. But it's coming along very nicely. We're actually looking to do demos in December, at least two, one focused for employer functionality and one focused on TPA functionality. And there'll be more information on our website about those demos. With the portal itself releasing early 2025, and we will advertise a date as we get closer to do the official rollout. In the meantime, I would recommend that everyone go to our landing page at maine.gov/paid-leave and sign up for the Get Notified list, and you'll get information in real time. When rules are finalized and there's any updates about the portal, these demos, and when it goes live. So I would recommend everybody get signed up for that Get Notified list to get information in real time.
If you don't use the money, do you use it or lose it, or does it roll over? And this is not like a HSA or FSA. This is a premium like insurance. So if you're contributing and you don't ever use it, if you never file a claim, you lose it.
It's Social Security. It's like paying into Social Security, retirement or Social Security disability. It's all going towards one trust fund and benefits are paid out of it. It's a social insurance model.
If the employees have to pay their share, will their portion be taken out each pay period, but employers will be quarterly? And on this answer, I would say it depends on how you're managing your payroll. But yes, employees will have to contribute their portion with each paycheck. Technically, the employers have to set aside that liability with each payroll as well. If you're using a payroll provider, generally speaking, we are collecting that and we'll pay that at the end of the quarter for you. If you're doing your payroll in-house, that will sit on your books as an outstanding liability to pay at the end of the quarter. So, must municipalities comply?
Yes, and I will add a little complexity to it. So we know that most municipalities have different bargaining units with different, police, fire, etc. I would definitely look at the FAQ that we have online about collective bargaining agreements and when paid family medical leave will apply.
Is mental health covered under paid family leave?
Mental health is medical health, and if it's a serious medical condition signed off by a medical provider, as specified in rule, which actually points to FMLA, it's all part of holistic medical health.
Can employees take 12 weeks of Maine paid family leave and then 12 weeks of federal leave? And I'm assuming that's speaking to FMLA. And my answer would be, I believe they probably could, because that'd be unpaid, but I would consult with an HR expert like Don on our team.
Well, that one I can speak to quickly.
Okay.
Our strategy and rule with the benefit stacking, quote unquote, is that the amount of your paid family medical leave bank, your up to 12 weeks, is reduced by any unpaid federal or unpaid Maine family leave. Remember, there's the unpaid Maine family leave. So any previous weeks of unpaid federal or Maine leave within the prior year, it reduces your paid family medical leave bank. So if somebody used, let's say, 12 weeks in February 2026, come May 1st, 2026, when the state program starts, since they took 12 weeks previously of unpaid federal leave, they could not take 12 weeks of paid family medical leave because their bank of paid family medical leave was reduced by prior use of unpaid federal medical leave. And then going forward, the employer should be running federal, for the employers that are covered under unpaid FMLA, they should be running any paid family medical leave concurrently with federal unpaid medical leave so that both banks are running down simultaneously. And that's in an effort to prevent, people using 24 weeks per year.
Awesome. All right, last question. Who determines the hardship?
So I would definitely say, because we're still in the public comment period, that it's complicated. I would probably defer on what the final rule might say, because we definitely heard some comments today, and we need to consider that. But it's definitely on our minds as to that question.
Yeah, undue hardships are a very complex process, and I would point to the draft rules because it's not easy to summarize in 30 seconds.
And one more just came in. Do employees have to contribute if they earn less than the 6 weeks average in the 4 previous quarters? If they're part-time, 5 hours a week? And yes, the answer is yes. Every employee must contribute. They are earning wages, they must contribute.
Yep.
And yes, I think this is a great place to leave it here. We have recorded this and we will be posting this online. We will send out an email probably tomorrow with the slides, with a link to the recording. We're going to try to summarize this Q&A as well for you, as lots of great questions, lots of great answers. Certainly, again, go to maine.gov/paid leave. Please, please, please sign up for the notify piece, and that will help you get in there. So, any closing thoughts, Reggie, Luke, Connor?
No, we just on our end, we just want to say thank you for giving us this opportunity. I know it's a lot to think about, but hopefully with the information that we have online, we can ease a little bit of those concerns. But if not, feel free to reach out.
All righty, and with that, we thank everybody so much for your time this afternoon. Lots of great questions, lots of great information. Reggie and Luke and Connor, thank you so much for joining me. And we will get an email out with the recording very shortly. Have a great afternoon, everybody.
Great. Thank you.
Thank you.